3 incredibly cheap electric vehicle stocks to buy now August 2024. Here are 4 highlights. 1. Nearly 1 in 5 vehicles sold globally in 2023 was electric. 2. EV sales in the US are expected to grow by nearly 20% in 2024. 3. This EV stock could be the next Tesla. 4. Looking for maximum upside? Consider Lucid. Also, if you would like to support us, feel free, at any time, to smash the like button and subscribe. Now let's dive in. This EV stock could be the next Tesla. Rivian shares initially attracted strong investor interest, debuting with a price-to-sales (P/S) ratio of around 50. By comparison, Tesla's P/S ratio was about 15 at the time. However, Rivian's valuation quickly plummeted, and as of Friday's close, its shares were trading at just over 2 times sales. While Tesla's valuation also dropped significantly, it still trades at 6.6 times sales. Tesla benefits from higher growth segments like its robotics and artificial intelligence divisions, but is also involved in lower multiple businesses such as charging and solar. With nearly 90% of Tesla's revenue still coming from vehicle sales, it serves as a reasonable benchmark for assessing Rivian's reduced valuation. Despite its challenges, Rivian has strong customer sentiment. The company's R1T pickup received the highest J.D. Power satisfaction ranking of any electric vehicle in 2023. Additionally, Rivian topped a recent Consumer Reports survey, with 86% of its owners indicating they would buy another Rivian for their next vehicle. In contrast, Tesla ranked 5th, with 74% of its customers expressing the same sentiment. Rivian has also been laying the groundwork for future growth. In March, the company unveiled its mid-size R2, R3, and R3X models, with starting prices as low as $35,000. These models have the potential to make Rivian a household name in the coming years, given their affordability. The company expects to begin shipping the R2 by 2026. So if Rivian has such a bright future, why are shares so cheap? Like Tesla, Rivian must demonstrate its ability to significantly scale up production and sales. While Tesla delivered 1.8 million EVs last year, Rivian managed only around 50,000. In fact, Rivian's production levels for 2024 are expected to be slightly lower than last year, partly due to recent modifications at its plant in Normal, Illinois, which required the facility to be offline for several weeks. However, these upgrades are anticipated to improve efficiency and profitability, with the company projecting positive gross profit in the fourth quarter. Additionally, Rivian recently secured an $827 million grant from the state to further expand the factory, adding to the positive outlook. As with any early-stage, capital-intensive company, Rivian will need continued access to significant capital to realize its long-term potential. There's no guarantee that investors will continue to support the company through its losses until it reaches profitability. However, with a strong early track record of producing highly regarded vehicles and the stock trading at just 2.1 times sales, Rivian presents a compelling opportunity for investors seeking the next Tesla. Looking for maximum upside? Consider Lucid. The potential upside for Lucid becomes evident when compared to Tesla's $568 billion valuation, with Lucid Group currently valued at just $6.6 billion. However, there's a significant catch. Lucid stock trades at 10.1 times sales, much higher than Rivian's 2.1 multiple. This disparity is largely due to Lucid's limited production, only 6,000 vehicles shipped last year, about a tenth of Rivian's output. For 2024, Lucid expects to deliver just 9,000 vehicles. Lucid faces more challenges than just modest sales. The company is burning through cash rapidly and lacks a clear strategy to penetrate the lucrative midsize market. For instance, its upcoming Gravity model is set to debut either late this year or early next year with a starting price around $80,000. In contrast, Rivian's R2 model is expected to have a base price of just $45,000. Historically, reaching a sub-$50,000 price point has been a key factor in driving significant sales growth, as seen with Tesla. On paper, Lucid stock offers the most upside. If the company can scale its sales to match Rivian's, its current valuation premium could quickly become justifiable. For example, if Lucid were to reach Rivian's 2023 revenue of $4.4 billion, its stock would trade at just 1.5 times sales. However, this is still not much cheaper than Rivian's current multiple of 2.1 times sales, and Rivian is much further along in reaching the inflection point for mass market sales. Lucid stock might appear more attractive if you believe its growth trajectory will eventually surpass Rivian's. But Rivian's established track record and current valuation discount make it the smarter bet today. Lucid's market cap of $7.29 billion remains a fraction of Tesla's, the leader in the EV industry. If Lucid can successfully execute its growth strategy and capture even a small portion of Tesla's market share, its upside potential could be significant. The company currently holds $3.99 billion in cash and equivalents, giving it a net cash position of $1.91 billion, or 83 cents per share. This financial cushion should help Lucid fund its expansion plans and navigate potential challenges as it scales operations, positioning the company attractively for the future. Looking to an EV maker with the ability to undercut and outscore its more expensive competitors, BYD company experienced a significant sequential decline in revenue and profits from Q4 2023 to Q1 2024. While this drop is partly due to seasonal factors surrounding the Chinese New Year holiday, the 30.6% quarterly decrease in revenue and the 47.33% fall in net income are still notably sharp. The year-over-year growth figures, 3.97% for revenue and 10.62% for net profits, are more positive, though not particularly strong. Despite this short-term weakness, BYD is poised to remain a dominant force in the EV industry, thanks to recent developments that make it one of the top undervalued EV stocks to consider. The company recently signed a deal to establish a $1 billion EV factory in Turkey. This new facility, with an annual capacity of 150,000 electric vehicles and an R&D center, is a key part of BYD's international expansion strategy and will strengthen its presence in Europe. BYD also plans to sell affordable EVs in Europe, such as the Seagull, which is estimated to cost around €20,000. Given its scale and ability to undercut and outperform more expensive competitors like Tesla, BYD is likely to maintain its position as the largest EV manufacturer. Do you have any EV stock? Do you think the EV boom is just starting or already fading? Let me know what you think in the comments below. Thanks for watching, good luck and good profit, by Edward Cash Trader. If you would like to support us, feel free, at any time, to smash the like button, and subscribe, and share with your friends all the valuable information.